Well, hello and welcome to Sansad TV. You're watching Viewpoint with me, Frank Rausan Pereira. Well, the Reserve Bank of India last week cut its key repo rate by a larger than expected 50 basis points and slashed banks' cash reserve ratio or CRR by 100 basis points, taking advantage of cooling inflation as US President Donald Trump's tariff threats add to global uncertainty. The RBI's pivot comes at a crucial moment. A strong monsoon is expected to lift rural incomes and sentiment, but urban consumption and private investment remain tepid. By unlocking bank funds, the central bank is betting that cheaper credit will revive urban demand, stimulate SME investment, and complement the rural boost, helping broaden the economic recovery. In this edition of Viewpoint, we will analyze RBI's jumbo rate cut and what it means for the economy. Joining me on the program today are Professor Charan Singh, CEO, EGROW Foundation, and Vineeta Hariharan, public policy expert. Thank you to both my guests for joining me on this edition of Viewpoint. Professor, let me start the program with you first. Let's first try and understand really the key takeaways as far as you are concerned with regards to the latest MPC meet.
So according to me, this was a fabulous RBI policy. The reason being it's more than a year that I have been saying that you are stunting growth in the country. The growth in the country, 6.5%, highest growth of any country in the world in the current global situation. Fine, I've heard that. But that's not India's potential growth. India's potential growth is certainly 8%. With 6.5% growth, per capita is only increasing by 5.5%. If we have to increase from 2,880 per capita income to 17,000 by 2047, which is just the entry point of Viksit, developed country, we have to grow by about 8% per capita income. That translates to 9% of GDP. Is it impossible? It's not impossible. Korea did it from 62 to 89, about 8%. China did from 1980 to 2012, 9.9%. There are enough global problems even at that time. So I'm saying the potential growth of India, which is enjoying a young demographic dividend window for about 20 years, should be around 9%. 6.5% doesn't give me the thrill. Now, if we have to grow at 9%, one important factor is the interest rate. So for more than a year, I've been saying that reduce the interest rate, they're too high. I was so happy the governor and others in the MPC heard it and they are now moving in that direction. That's an important thing. The other important thing is if we have to go to Viksit Bharat, we have to ensure liquidity is available in adequate amount to many people as possible. They have done the CRR cut. So these two are very distinct things that I would say will go in history as a turning point in the monetary policy. The third and the last point that I would like to make is actually the rate at which we shot up our repo rate was actually not justified at all. We were trying to match step by step with the US. That was not necessary at all. There, if you look at 30-year average inflation, went from 2 to 10% because of the Russia-Ukraine war. And all that they had done pent up from 2008. We had played our COVID policy very, very carefully. Our 30-year average of inflation is around 6%. Despite Russia-Ukraine war and the global uncertainties, we were hovering in the range of 6.57%. So where was the need for us to go step by step as matching America? Consequently, what we did, we hurt our growth. Firstly, our potential growth is very high and we should reach that. Secondly, by raising the interest rates, for the last 3 years, we have been hurting growth. There's a sacrifice ratio which is involved. So I'm very happy, finally, the MPC and the RBI brought down the rate and ensured easy liquidity in the market.
Absolutely. Okay, points very well taken. The key highlights really as far as Professor Charan Singh are the fact that the interest rates have come down. There's going to be liquidity really, and those are certainly things that we need at this point in time. Vineeta, Hariharan, let me bring you to the picture now. Let's understand, your key highlights really is the key takeaways for you, key things that you'd like to point out from the MPC.
Right, absolutely. So this particular move by the Reserve Bank of India is monumental, I would say, and a very, very bold and proactive step taken by the Reserve Bank of India Governor Malhotra ji. So this is actually in the context of the global uncertainties, which has been pointed out. The tariff uncertainties, then the geopolitical tensions that the world is witnessing at large. The general global outlook is pessimistic in terms of the growth rate, but India continues to stand tall with its average growth rates still very high and highest in the world, the fastest growing economy in the world. So this particular move by the Reserve Bank of India was a proactive step to protect it against the future risks that are anticipated. And as always, India has been standing tall in the face of such recessions, global recessions. We have tided over. Even the recent pandemic, we have tided over that. Huge economic and global uncertainty that the world witnessed at large because of our robust economic policies. We did a repo rate cut then. We did infusion of liquidity into the market then, and now we do it again because here we're doing it proactively, and by 50 basis point, that's a huge amount, and now it is 5.5%, and the cash reserve ratio also down to by about 100 basis points is also a huge infusion of liquidity, about 2.5 lakh crore into the market. That's going to be a huge step as long as the monetary policy transmission takes place well, and which the governor has also said they would be monitoring, now and then, frequent monitoring by the RBI would be there to ensure that this is taken to the last mile from the banks to the retailers and to the population at large. And he also spoke about India's macroeconomic stability. He spoke about a very interesting thing which we need to reiterate is about the 5x3x3 matrix. He said the ecosystem is actually going through the 5 stakeholders of corporates, banks, households, government, and external sector, displaying very strong balance sheets. The stability that India has given in terms of price, in terms of financial stability, and the political stability has given rise to a large policy stability over the last decade. And the 3 Ds, the digitization, the demographic dividend, and the domestic demand. So we are very strong with our macroeconomic fundamentals, and of course, leveraging on our inflation, which has seen a record 5-year low of 3.2% and a projected of 3.7%. I think keeping all this in view, it gave room for a very good stimulation in terms of this easing.
Absolutely. Points very well taken. Let me take the discussion forward now. Let's look at some positives. Professor Charan Singh, the monsoon outlook is supposed to be very good, and this clearly is going to have a positive impact really as far as the economy is concerned. We are going to see more liquidity. We are going to see, availability of credit, etc. But, who's going to borrow at the end of the day? That's something that we need to look at as well. How do you look at all these aspects?
Well, the Indian economy is poised for growth. There's no second thought about it. The young demographic dividend is there. Obviously, there's going to be demand. The monsoon is going to be good. Agriculture is going to do well. And agriculture generally makes the demand move. And therefore, obviously, if agriculture does well, and agriculture, obviously, MSP is very good. So you will find that the engine of growth is moving. Industry will move, MSMEs will move, all that is going to happen. So I look at it as a very positive thing. Now, once the interest rates are down, what am I expecting? Please remember, the investment pattern in the country from the private sector is still not moving. The government has done immensely well, unparalleled globally, the way they have invested in infrastructure. The capital expenditure that has risen up during the COVID time and thereafter, I think goes to the credit of the government, that they are trying to pump prime the system and say, look, we need investment and we are the first movers. Here we are doing investment. The private sector is not coming in. Once you lower the interest rates, now the private sector should start coming in. But please remember, the private sector is not waiting on the brink and saying, hey, you lowered the interest rate, here we are. As Madam Vineeta just mentioned, the transmission mechanism has to take place. It has to transmit across the economy. That takes a few months to 6 months to 8 months. The decision making, the board level decisions have to be taken. Okay, now that the interest rates are low, I'm ready to now go and invest. Then there is a drawing board. On the drawing board, the plan is done. Investment has to be scouted for, and then the investment takes place. That takes 18 months odd. So therefore, expecting that yesterday the rate of interest was raised, it's created a very good conducive environment in the system. But if you think investment will go up tomorrow, that's not going to happen. We'll have to be consistent and we'll have to ensure that the policy is going to stay here. Now the issue is, we are at 5.5. Is that the end of it? The Reserve Bank has changed the stance from accommodative to neutral in their wisdom. That's perfect. But then please remember, historically, we have touched 4% repo rate too, and not too far away in the distant memory, just around COVID. So that means there is enough space for us to lower the interest rates if inflation is coming down. That also means that the private sector is watching. And if the private sector is of the view that 5.5 is high, they can come down, then they will continue to wait. And they will like to see how much time the transmission takes place. That's a very valid point. So if the transmission happens easily, interest rates come down easily, you will find at the end of the day, my aim was to spur private sector investment. And if I successfully do it, you find a complete new cycle setting in. So you'll find private sector, small industries, everybody is now starting to move. One thing good that's happening in the country, the whole country is psyched towards Viksit Bharat. That euphoria is there. Everybody wants to now ensure that. Now, given that everybody is geared into Viksit Bharat, everybody knows investment has a role to play. Everybody knows that the country is enjoying a global status now. FDI and other things are coming in. Therefore, I think the time is conducive. You will find over a period of time, not tomorrow, but in a few months' time, you will find that the borrowers line up outside the banks for more resources.
Absolutely. All right. Points well taken. Let me take the discussion forward now. Vineeta, Hariharan, Professor Charan Singh has touched upon the aspect of, private investment and how really it needs to pick up, and it will pick up in probably due course of time over the next quarter or the next two or three quarters. Let's also look at another problem area that we've seen over the last 3 or 4 quarters. That has been urban consumption, and that has been a big challenge area. Do you see that improving? Do you see a change really as far as urban consumption is concerned? And let's also not forget or not keep out the MSME sector, because that is a very crucial and an important sector as well.
Yes, absolutely. So, as you mentioned about MSME, so the MSME sector is bound to benefit greatly by this move because they are the ones who are actually standing in line in the queue, as Charan Singh just mentioned. So, 99% of our MSMEs are also micro entrepreneurs. So, this particular liquidity infusion will benefit the micropreneurs greatly, and especially in the agriculture sector, as well as in the infrastructure and in the green energy sector. In all of these niche segments, the entrepreneurs and the enterprises in these niche segments stand to benefit from this liquidity infusion, and so therefore we see the consumption patterns also would definitely improve. And urban consumption has also been showing a healthy trend. It's not just rural, of course, because of all the climatic and the monsoon conditions favoring the rural demand, but urban consumption has also seen an uptick. And with this particular infusion, I'm sure this urban consumption and the urban consumers are also aware. The awareness levels are much higher. So therefore, the consumption levels will see a pattern that is going to be positively moving upwards. And like the governor himself mentioned, let the market forces play the role now. And as the invisible hand of Adam Smith, I'm sure there would be the entire demand supply situation balancing out. And this particular tool which the RBI has adopted, balancing growth and inflation, I think it's beautiful, and it's coming in at the right time. time, and a very bold and I would say very required step and bold step by the Reserve Bank of India, which is going to definitely positively impact private consumption and urban consumption.
All right, let's take the discussion forward now. Professor Charan Singh, what kind of inflationary impact do you see this having, if any? Because inflation has been under control for some time now, and that's been a great trend, really. Is this going to have any bearing on inflation going forward? And what about banking system as a whole?
Very good questions, Frank. As far as I am concerned, I have been challenging the inflation concept, inflation targeting concept for some time now. Please remember, we are thinking about inflation on a sample-based consumer price index, the base of which is more than 10 years back. Right?
Yes.
So it's high time we start looking at the pace. Mine and your consumption basket must have moved in 10 years. If the poverty level has crashed from 23% to 3%, just imagine that basket on which we are deciding our inflation would have also changed tremendously. It still is showing 40% food and 10% energy, and 2/3 of the energy is no more coming from oil. It is coming from renewable sources, right? So I think the very concept of inflation, as you and me think about it, needs to be revisited. And once we revisit our indices, then we have to think about inflation targeting. Now, if a 30-year average is 6% and we have fixed the pivot of the target at 4%, by the very structure of it, we will be stunting growth because we are targeting 4%. The rate of interest goes up, keeping in mind the 4%. Our 30-year average is around 6%, and therefore our interest rate is higher than usual. Growth investment will be lower. Now, I think that whole paradigm needs to be revisited. It's too structural and too way back. The model is too old here. We need to rethink and Secondly, we are not anymore traditional India now. We are targeting for a Viksit India, which is a quantum jump from where we were these years. These all indices were designed, and these all inflation targets were designed for life as it goes normal. We are not going normal. This Prime Minister is not a normal Prime Minister. He is not just sitting saying, okay, everything chal raha hai. He wants to take the country on a quantum leap, not even a jump. And the per capita income has to grow more than 5 times in 22 years. It's not a joke. So therefore, the economists, the statisticians will have to come up to fulfill the dream of the Prime Minister. And I think this concept of inflation targeting needs a very quick revisit. Now, when it comes to banking, you have raised a very pertinent question. I am looking at the whole policy starting from April this year. All policies are in a string of Viksit Bharat. By 2027, by 2047, I have to generate a per capita income of $17,000. The budget, the monetary policy, everything has to look towards it, not only of the center, but also of the states. The Prime Minister and Niti Aayog told the states, we are one team coming together. Have you seen, and I think we need now next step, a banking roadmap. Say, what will be the bank in 5 years, 10 years, 15, 20, 22 years? What type of a banking structure will catapult me into the Viksit Bharat? Narsimham 1 and Narsimham 2, which happened in 97-99, now is time for a new report to look at banking, look at non-banking, look at pension funds, everything that will provide resources to the industry to grow. So therefore, I think what the governor has done, and I'm sure this is in touch with the Ministry of Finance, what they have done, they've opened up the box now to say, we are embarking on a new journey, join us. Otherwise, such a bold step is not easy. That you reduce the repo rate by 50 basis points and you reduce the CRR by 100 basis points. So I think the signal is clear. The country wants to start the journey on Viksit Bharat, and therefore the banking sector has to now identify. The biggest bank in the country, State Bank of India, while the Prime Minister has told the states to come out with their Viksit Bharat, Viksit State, Viksit Municipal Corporation plans, I think time is we have to tell the bank A, bank B, bank C, come out with your Viksit Bharat 2047 plans with a Gantt chart of 5 years, monitorable targets every 3 months. I think that's where we need to now move into.
Absolutely. I think planning is the best way to go into the future and realize our dreams. Vineeta, Hariharan, coming back to you now, let's look at the GDP forecast of 6.5%. Clearly, we still are the bright spot as far as the world economy is concerned. Largest growing, or the fastest growing large economy in the world. So what's really working for us and what challenges do you see along the way?
Sure. So I just as Professor Charan Singh just mentioned about the Viksit Bharat. I think Viksit Bharat is a great goal and a great mission that the entire country has been catapulted into, and it's been broken into segment wise, and every sector is asked to move towards Viksit Bharat 2047, where we're looking at if we need Viksit Bharat 2047, 8% ideally should be the growth rate that we need to arrive at. But looking at the global outlook, it's like around 2 to 3% is the global growth rate. So we're far ahead of the global average in terms of the growth rate, definitely. So what's sticking for us, what's working for us is, as we said, rural demand is definitely on a high. All our agriculture policies, all our support to farmers, the programs that have been designed towards digitization of farming equipments, farming practices, all of that has improved tremendously and they benefited farmers greatly. And also the liquidity infusion to the farmers' bank accounts through the direct benefit transfer. I think all of this together, and of course the hard work from the grassroots level, from the farmers, and all of this has worked all together and improved rural demand. And as you mentioned about urban consumption also earlier, I think private consumption is about 56% of GDP today. So, and manufacturing is also on a high with our Make in India initiatives, Atmanirbhar, even the recent Operation Sindoor, we've seen so many of our drones indigenously manufactured being deployed. So I think that's a great space that we are in today in terms of Atmanirbharta and towards Viksit Bharat 2047, and our services sector has also picked up great momentum in terms of also bringing in a lot of FDI. Our FDI is also on a high, and our foreign exchange reserves are also very comfortable in terms of actually looking at supporting us for a long time to come. So we are in a very good space now, and what's working for us is of course our strong, robust policies that we've been seeing over the last decade. NDA 1, the initial government focused on strengthening basic amenities, then we move towards economic amenities, skilling, providing employment, and more than employment, making entrepreneurs out of our people. And then now we're focusing on frontier technologies like AI and all of that. Digitization has always been the infrastructure provision towards digitization. Now we're looking at tools of digitization and moving up the ladder in terms of new gen technologies. So I think everything is working for us in terms of that. What needs to be done? Challenges like I agree with Professor Charan Singh, that's a transmission. The policy transmission is somewhere we need to really work hard on. And how are we translating this to the states, down to the districts, and down to the Grama Panchayat? I think this government's philosophy is saturating all amenities for Grama Panchayat. So we should look at a bottoms-up policy planning and also strengthening our cadres right from the village level to the district level to the state and to the national level. A national level, of course, we are getting it right, but the state down below, I think capacity building, improving implementation, policy awareness, and spreading the last mile message of this policy initiatives that are taken by the central government from time to time.
All right, perfect. Okay, time to get quick closing comments now from both my panelists with what next and the best way forward. Starting first with you, Professor.
So I think we are at the cusp of a great journey. We should not lose this opportunity. The demographic dividend is only available to us for 20 years. And after that, it's going to start fizzle out and fading away. Whatever best we can do right now, we need to punch in at this very point. Once we lose this opportunity, it's not going to come back for many more decades to us. Please remember, the country is aging. 8.3% is the aging population now, 60 years plus. That translates to nearly 11 crore people. That process, once the demographic dividend is fizzled out, that aging process will become very, very rapid. We will then have to ensure that these aged people who are not productive, we have to take care of them. Now, given the situation that we have only 20-year window, I think every one of us in the country from a local boy in the village to the policymaker sitting in government. Everybody has to give in their best. I don't see that happening right away, but I think the Prime Minister's clarion call at Niti Aayog was exactly in that direction, where he wants state by state. And when he says states, obviously he also has districts and he has municipal corporation and third tier government also in mind. Now please remember, if there is a marriage in the family, the whole family is excited. There is a different type of a bounce in the step. The servant is also excited. The dhobi is also excited. The nephew is also excited.
Right.
That excitement needs to be created in the country, that in 20 years, we are going to be walking absolutely shoulder to shoulder with the best of the most advanced countries in the world. I think that needs courage, that needs strategy, that needs planning. We are at the cusp of it.
Absolutely. And Vineeta, Hariharan, please close the show for us with your quick concluding remarks.
So I think monumental step taken by the Reserve Bank of India, and hearty congratulations to the governor for this. And I think, as Professor mentioned, we all need to ride on this wave and leverage on all these policy incentives that the government of India is giving to all stakeholders concerned, right from the farmer to the MSME to the youth to the women. I think all of us should take part in this Viksit Bharat journey that India is witnessing, and all of the policy facilitation that the government of India is doing. I think the states have to take advantage of this. The banks have to follow suit with their implementation measures, and all of the other bodies, local bodies, the state government authorities, all of us have to play a role in Viksit Bharat and also leverage on all the frontier technologies that are in place, and also look at following the frameworks and not to kind of go overboard with all of this, and see that our NPAs are in check. And I think at the end of the day, we all need to fortify Adam's invisible hand and see that we all do the balancing act correctly. Thank you.
Absolutely. I think the balancing act is going to be most crucial and most important. Thank you to both my guests for joining me on Viewpoint and putting things into perspective for us. Well, what's coming out of this discussion is that the two key highlights as far as the RBI's latest MPC is liquidity infusion and low interest rates, with a scope for interest rates maybe even going down even further as the economy picks up and inflation is under control. Well, it's a great opportunity. We are at the cusp of doing something really wonderful and historic. The time frame is of course limited because demographic dividend is not going to last forever. So the time to act is now, and the time to put our best foot forward is now, if we have to ensure that we realize our dream of a Viksit Bharat. With that, it's a wrap on this edition of Viewpoint. This is Rausan Pereira signing off.
To watch more programs of Sansad TV, subscribe to our YouTube channel and don't forget to like and share them.